Welcome, thanks for joining me today. Today, I will show you a very simple trick so that you can target lower buy prices. That way, when you're buying your favorite stock, your favorite crypto, you are playing it safer. And in the long run, it's going to generate more profits for you. Yes, you can target lower buy prices. And all it takes is just reading the signs. Think of it as when you're driving, you're reading the signposts. If you're ignoring the signposts, there's higher chances of crashing your car, getting into accidents, or other people getting into accidents. You want to avoid that. Today, I will show you a special trick. It's called gaps, looking at your gaps. The gaps will provide target prices where you can find lower prices to buy at safer levels. Let's jump right in. The stock that I'm going to show you today is AMD. It's a very popular stock that people are trading and people are investing in the long term. It's a pick and shovel play for the AI boom that we are going through. And you can see that since April, it's gone up 250%. Wow, that is amazing. And look at that parabolic growth. It's a very steep upward curve. And eventually, the steeper it is, these stocks will usually pull back. It's a great stock. Perhaps in the long run, this is not something we have to worry about. For long-term investors, you can just buy and hold forever. However, if you're dollar cost averaging, which is very smart, you don't have to blindly cost average. You can target lower buy prices. There are levels that everyone is waiting to buy at. So you might as well learn what those levels are, save yourself money, and also you are making educated guesses so you feel better about your purchases. When you look at this chart, what do you see that is very obvious? Now, most people, they will say, well, I can draw a horizontal line connecting the dots. This is a buy level here. This might be a buy level here. That's called finding local support, which is a powerful technique as well. And I've taught that in previous videos. Today, we're going to look at this. There's a big gap. A gap is where the price jumps the next day and there is a lot of airspace. You can see that there's a pocket of air here. There's one thing you have to know about gaps. Gaps get filled. They're unfinished business. And when I say filled, when the price jumps up, we eventually want to fill the gap, which means the price will come back down to fill it. And then on a good stock like AMD, then it can resume its uptrend. It's not guaranteed that gaps have to get filled, but the chances are very high, and everyone is waiting at the same spot to buy at this point. So there's high liquidity. There's a lot of cash waiting. Buyers are being patient to buy at this support level, and the support level is the bottom price here before the price made that big jump the next morning. The way I can draw that is with a horizontal line. And let's zoom in here a little bit. So you can see that this line is quite nice because it also matches up with points here, points here, points here. It doesn't have to be perfect, but you can see that the price bounced around, right? Here, and then it came down, broke through, and the price hit this line and it became resistance, right? Resistance, and it's been bouncing around there. The price currently for AMD is $214. And the idea is that the price can eventually pull back, maybe not on your timing, but eventually it will pull back. And imagine if you've dollar cost average, it keeps going up, keeps going up, it keeps going up, right? Well, if you did that and say you bought at 214, you put all of your extra savings here, and the gap fills later on, you're missing out on a 20% discount. 20%. That's quite a lot. If you think, for example, if you put $10,000 into dollar cost averaging at $214 and you miss out on 20% discount, that's $2,000. That's not small money. That $2,000 can be profit instead of trying to recover that $2,000 loss. If we zoom in here, you can see that we have other air pockets. We have other gap ups. We have a gap here. I'm going to draw a horizontal line there as well. You can see that the price jumped and the price did come back down. It didn't perfectly touch. So technically that is a gap up, but this is not as strong as this gap because the price didn't even come halfway down. Now, further gap ups, we can say there's one right here. Look at that. At $104, we're at $214. Imagine if the price pulled back. That's a 50% drop. Now, right now we're in a bull cycle. The market's all going up. And we're not going to see this kind of pullback, this deeper 50% pullback, unless the overall markets, which is NASDAQ or S&P 500, if those pull back into bear territory, then yes, we can easily see a 50% pullback here. And of course, there's one more that I'm going to draw here at $87. I don't expect AMD to fall back down to $87 anytime soon. So let's stay focused on these higher gap up levels. These are prices where you can dollar cost average. You're making smart, educated guesses, not just going on gut intuition. And this is the whole point of my training is to make you aware, right? These are signposts. And as long as you can read the signposts, you can navigate your dollar cost average spending a lot safer. You can feel a lot better about it and you can share it with everyone else. If someone asks you, why did you pick this price? Now you know. There's one other thing that I want to note. When I look at gap ups, and other traders look at it too, they look at the daily frame. Yes, you can switch to the weekly time frame. W for weekly. So if I flip to the monthly, M for monthly. And of course, on the monthly, you don't see any gap ups. That's because on the monthly charts, it's more of a bird's eye view, so you're not going to see the details that you see on the daily charts. But that's okay because, as I said, the daily charts is the first place you want to target your gap ups. And of course, there's the reverse side of it, which are the gap downs. On a gap up, you see lower price jumping to a higher price next morning, and that lower price becomes a support level. Now let's look at an example of gap down, just to round it off, just so that you have the complete picture. Let's move over, and you can see an air pocket from here, 161, and it went down to 153. I'm gonna put a line here. Let's make this red. I'll explain shortly why this is red. On a gap down, right, higher price next morning, it quickly jumps down to a lower price level. What happens is on a gap down, the previous day high becomes a resistance level, which means when eventually price action wants to close this gap and it wants to close by going upward in price. But usually what happens is this becomes a level of resistance. It becomes an overhead resistance. So if the price does come up, it tries to push through it, but it gets pushed back down to close the gap, comes back up to that resistance level, and that becomes resistance where the price comes back down. Let's take a look at what that looks like. And so that was back in October 29th, 24. Price came down. Eventually, it's coming back up to take care of unfinished business here. And you can see it gapped up. It hit there, and there you go. It went up, tested the resistance, gap up level here. It came back down, and eventually, and this happened July 17, 25th. Many moons later, it came back to take care of unfinished business. On the first pass, it got rejected, came down, and eventually it pushed through, but then it came back down, and you can see once price is above previous resistance, that resistance becomes support. As I talked about in previous videos, it's good to know that. And it comes down as support, comes up, comes back down, retest. Now, resistance now turns support. It comes back down, bounces back up, and you can see that price action bounces on this line as support, support, turn resistance, turn resistance. The point of this is nothing is random. Everyone's watching the same charts. There's a lot of human psychology. When you understand human psychology, then you can make better buy decisions that are safer and more profitable in the long run. Excellent. Now you understand how gaps work and how gaps is a powerful tool in your toolkit to target lower buy prices, to play it safer, and to profit more in the long run. Yes, you can target lower prices. Don't listen to the masses out there. It just takes a few tricks to understand. And this is a life skill that you can take with you forever and you can share it with other people. Thank you for watching, and I'll see you in upcoming videos. Take care.